Well, Trish, the Federal Reserve raises the benchmark rate, the federal funds rate, to 2 and 2.25%. In between that time, still the Fed sees 4 more rate hikes this year in their forecast. However, it removed the language from the FOMC saying the monetary policy remains accommodative, signaling that there could be a pause at some point. But again, the forecasting saying 4 rate hikes total this year. The Fed sees then another 3 rate hikes according to their forecast in 2019. 2020, we're looking at 1 rate hike. Now, the Fed sees the longer-term federal funds rate at 3%. Now, the decision to raise the rates this time was unanimous. The Fed signals they may be closer to a short-term normal or neutral rate at this point. Now, the Federal Reserve upped their economic outlook for the year, saying it is now the GDP is going to be 3.1%. The Fed sees inflation around its target between 2018 and 2021, around 2%. Federal Reserve sees unemployment rate falling to 3.7% this year, and again falling again in 2019 to 3.5%, holding there in 2020, then raising again to 3.7% in 2021. And it sees the longer-term unemployment rate at 4.5%. So again, the big number here, they did raise the federal funds rate 2 to 2.25 now, and they see 4 rate hikes for this year forecasted. However, there is language there might be a pause. 3 rate hikes next year, 1 in 2020. Trish?
All right. Thank you very much, Edward Lawrence.